Hello students, in present video I am going to explain about ninth problem from final accounts topic. I am taking this question from Telangana State Telugu Academy Inter First Year Accountancy Textbook. But this video is useful to all commerce students who want to know about final accounts topic. Question is available in the description box. Previous videos links are also available in the description box. Let us start the problem. From the following trial balance of Vinayaka Enterprises, prepare final accounts for the year ending 31st December 2018. In question, trial balance is given and adjustments are given. Final accounts contains three things: trading account, profit and loss account, and balance sheet. Trading account, profit and loss account. These two are accounts now. So these two accounts in one table we have to prepare. Balance sheet, separate table. Balance sheet is not an account. It is only a statement. So we prepare trading account and profit and loss account to know the gross profit or gross loss and net profit or net loss. By preparing trading account, we can know gross profit or gross loss. By preparing profit and loss account, we can know net profit or net loss. These two accounts are nominal accounts. So while preparing these accounts, nominal accounts rules we should follow. What is nominal account rule? Debit all expenses and losses, credit all incomes and gains. So debit side, expenses and losses we have to show in trading account and in P&L account. Credit side, incomes and gains we have to show in trading account and in P&L account. Then debit side, expenses are of two types: direct expenditure, indirect expenditure. Direct expenditure we have to show on debit side of trading account, and indirect expenses on debit side of profit and loss account. So what do you mean by direct expenditure? Expenses up to manufacturing process are known as direct expenses. Expenses which are incurred after manufacturing of goods are known as indirect expenses. P&L account debit side we have to show them. Similarly, direct incomes, trading account credit side, indirect incomes, P&L account credit side. No? Direct income means what? Main income. For any trading organization, main income is sale. So sales income, trading account credit side we should show. All other incomes are indirect incomes. For example, interest received, discount received, dividend received, commission received. All these incomes we have to show on credit side of profit and loss account. These two are accounts now. Therefore, debit, credit symbols we have to write. And this is a format: particulars amount, particulars amount. First trading account we prepare, then continuation is profit and loss account. In trial balance, debit column, he gives expenses, losses, assets, drawings. So expenses and losses we have to show on debit side of trading account and P&L account. Similarly, in trial balance credit column, he gives liabilities, incomes, gains, nothing but profits, provisions, reserves, funds. So only incomes and profits we have to take on credit side of trading account and profit and loss account. This is a heading for trading and P&L account. Trading account, comma, profit and loss account of Vinayaka Enterprises for the year ended 31st December 2018. First trading account now, debit side with opening stock we have to start. In trial balance debit column, opening stock is given 7,600. With that amount we should start. To opening stock. Next we have to write purchases. To purchases. Observe credit column. Purchase returns are given 400 rupees. Therefore purchases amount in inner column 12,400. Purchase returns we have to subtract minus returns 400. Remaining amount in outer column. Now remaining direct expenses. Debit column, purchases, furniture, opening stock, cash, sales returns, wages and salaries. In previous problems, he used to give wages separately and salaries separately. But here wages and salaries is given. Here you have to observe which word is given in first. Wages and salaries amount is 4,700 rupees. So wages amount is given in starting, then salaries he has given. Meaning is In this 4,700 rupees, maximum amount is wages and salary amount is negligible. So accountant tries to minimize the number of accounts. For negligible salaries amount, he doesn't want to maintain a separate salary account. So for wages and salaries, he is maintaining only one account. And here wages amount is more. We cannot tell in say 4,700 rupee how much wage we have and how much salary is given. So wages amount is more. As wage amount is more, this amount in trading account debit side we have to show, because wages we show in trading account debit side. Suppose in question he has given salaries and wages, then the meaning is in this 4,700 salaries amount is more than wages amount. Salary we show in P&L account now, therefore salaries and wages 4,700 in P&L account debit side you have to show. So remember, if wages and salaries are given, trading account debit side. If salaries and wages are given, P&L account debit side. Now this is trading account debit side. To wages and salaries, 4,700 rupees. Rent rates, taxes, sundry debtors, machinery, investment, discount, commission, carriage. Carriage inwards, carriage on purchases. These three are same. Direct expenditure, trading account debit side, 600 rupees. Trade expenses. Trade expenditure means selling expenditure. By seeing trade word, don't think that this is related with a trading account. Indirect expenditure, ignore. Stationery, factory rent. So factory related expenses are direct expenses. Trading account debit side. To factory rent. Amount in inner column because adjustment is given. Adjustment number 3. Outstanding factory rent 400. Outstanding means we have to pay. We should add. Plus outstanding. Total in outer column. Coal and gas. In manufacturing process, we incur this expenditure. This is direct expenditure. Trading account debit side. To coal and gas. 2,200 rupees. Interest on capital, bad debts, goodwill, accrued dividend. Debit completed. Come to credit. Capital, bills payable, creditors, interest received, sales. Direct income, credit side. Sales returns are given in the question. Therefore, sales amount in inner column, 28,500. Returns we have to subtract. See the debit column, sales returns amount, 1,500 rupees. Remaining amount in outer column. Come to adjustments. First one, closing stock. This is related with the trading account. And one more adjustment is given. Adjustment number 6, new point. Stock worth 10,000 destroyed in fire and insurance company admitted a claim of 7,500 rupees. So our stock is damaged in fire accident. 10,000 worth of stock is totally damaged in accident. We insured this stock. So we have taken fire insurance policy from one insurance company by paying some premium. So as stock is destroyed, company accepted to pay a claim of 7,500 rupees. So total loss is 10,000 because 10,000 worth of goods are damaged. But from insurance company, only 7,500 rupees going to come. So 10,000 rupees minus 7,500, 2,500 is not going to come from insurance company. This is final loss to us. So this adjustment 3 times we have to show. Other adjustments 2 times we used to show. One time in trading account, second time in balance sheet. Otherwise, one time in profit and loss account, second time in balance sheet. But this adjustment comes for 3 times. In trading account, in profit and loss account, and in balance sheet. In trading account, where to show. Suppose there is no fire accident, then that 10,000 will be included in closing stock now. Closing stock we show on credit side. So when goods are damaged, this damaged goods value also credit side only we have to show. Reason is, if these goods are not damaged, then this goods value 10,000 would have been added in closing stock. That is why credit side once we have to show. By stock destroyed by fire, 10,000 rupees. Total stock value we have to write here. Then finally, closing stock. In adjustments, he has given the amount 10,500. All amounts were taken in trading account. Finally, find out the totals of two sets. Credit amounts total 47,500. Debit amounts total is 29,100 rupees. Difference 18,400 is profit. Because credit side we wrote incomes now. Income total is more than expenditure total. Therefore, answer is profit. Debit total is less. Therefore, on debit side you have to write this answer. For this you have to write 2 gross profit. Two sides put the totals. Highest total 47,500 rupees. With this, trading account is completed. Next continuation, P&L account. This is profit and loss account. First we have to bring gross profit on credit side now. By gross profit 18,400. See the debit column of trial balance. Purchases, furniture, opening stock, cash, sales returns, wages and salaries, rent, rates and taxes. Indirect expenditure, debit side 3,600 rupees. No adjustment. Sundry debtors, machinery, investment, discount. In debit column, discount is given. Means discount allowed. Loss. Debit side. To discount. 1,100 rupees. Commission. In debit column, commission is given. Means commission paid. Expenditure. Debit side. Amount 1,300 rupees. Carriage, trade expenses, indirect expenditure, P&L account debit side, 700 rupees. Stationery, office related expenditure, indirect expenditure, P&L account debit side, 1,000 rupees. Factory rent, coal, gas, interest on capital. So interest on capital is given in trial balance. If it is given in adjustment, 2 times we have to show. This is given in the trial balance now, only one time, where interest on capital. First of all, capital means owner brought money into the business. In accounts, we follow business entity concept. As per that concept, while maintaining accounts, accountant should think that firm is separate, owner is separate. So owner is bringing capital into the firm. We should assume that from one outsider, firm is taking loan. So we have to pay interest to owner. Interest on capital means firm should pay to owner. In firm's books, we are preparing accounts. To the firm, this is an expenditure. Expenditure we have to show on debit side now. Therefore, interest on capital, debit side we have to show. Amount 3,000 rupees. If it is given in the adjustment, second time where we show this, in balance sheet under liability side, to capital we have to add. But here this amount is given in the trial balance no. So to capital we should not add in the balance sheet. Only on debit side of P&L account we have to show like this. Next, bad debts 1,000 rupees. So from debtors 1,000 is not going to come. Loss. See the adjustment number 2. Bad debts 1,500 and provide a reserve for doubtful debts 5%. So in trial balance and in adjustments, bad debts are given. 2 times bad debts are given. And 1 time in adjustments, provision for doubtful debt, reserve for doubtful debt is given. So these 2 bad debts are losses. Losses we have to show on debit side. 2 bad debts. Trial balance amount 1,000 rupees in inner column. Plus in adjustments again bad debts are given no. Additional bad debt amount is 1,500 rupees. Total in outer column 2,500 rupees. Next come to reserve for doubtful debt. And provide reserve for doubtful debt 5%. On debtors you have to provide this. And reserve for doubtful debt means expected loss. Money may come from debtors or may not come. Expected losses also debit side only we have to show now. 2. Reserve for doubtful debts. On debtors you have to calculate. Debtors amount is given in the trial balance 13,500 rupees. Don't directly calculate 5% on this because bad debt amount 1500 is given in the adjustment. No? Adjustment amount means what? This 1500 is not yet deducted from this 13,500. And bad debt 1000 is given in the trial balance means this 1000 is already deducted from debtors. After deducting 1000, remaining debtor value is 13,500. So as that 1000 is already adjusted from this amount, again we should not subtract 1000 rupees. But this 1500 adjustment bad debt is not yet deducted from debtors. Now we have to deduct minus bad debts. Adjustment bad debt 1500 rupees. Then the remaining debtor value is 12,000. So this is the actual debtor. On this 12,000, RDD 5% we have to provide. 12,000 into 5 by 100. 600 rupees. Put this in brackets. Next, goodwill, accrued dividend. Debit column completed. Come to credit column. Capital, bills payable, creditors, interest received, income, indirect income, credit side. By interest received. Adjustment is given, therefore amount in inner column 1500 rupees. Adjustment number 5. Interest received in advance 500 rupees. Means in this 1500, 500 belongs to next year. So current year is 2018 year. Next year 2019. So current year related interest income is only 1000 rupees. And 500 next year interest also we received in current year. So next year interest we have to show in next year. We want current year profit or loss. That is why we are preparing P&L account for current year. So if you want to know current year profits and losses, current year expenses, current year incomes only we have to consider in current year, no? But 500 is next year amount. So what to do? We should subtract that. Minus received in advance 500 rupees. Current year income in outer column 1000 rupees. Sales, purchase, returns, commission. In credit column commission is given. Means commission received. Indirect income. Credit side. By commission 4,500 rupees. Discount. Credit column discount is given. Means discount received. Profit. Credit side. By discount 3,600. Miscellaneous income. In previous problem also, in 8th problem also I explained about a miscellaneous word. So miscellaneous means various small amounts. So various small incomes we have. Instead of opening a separate account for each amount, accountant dumped all those small incomes in a separate account known as miscellaneous income account. So this is indirect income, P&L account, credit side. 3,200 rupees. Trial balance is completed. Come to adjustments. Closing stock. One time trading account credit side. Second time in balance sheet, not in P&L account. Second point, bad debts 1500 and provide reserve for bad and doubtful debt 5%. Completed. Third, outstanding factory rent. Completed. Fourth, depreciation on furniture 10%. So depreciation on debit side we have to show. So furniture value reduced because continuously we are using that furniture. So asset value decreased, it is a loss. P&L account debit side we have to show that. 2. Depreciation on furniture. Furniture value 8,000 given in trial balance. We have to provide 10% depreciation on this furniture. 10 by 100. 800 rupees in outer column. Next. Fifth point. Interest received in advance. Completed. Sixth. Stock worth 10,000 destroyed in 5 and insurance company admitted a claim of 7,500. So 10,000 worth of goods are damaged in fire accident. But from insurance company, we are going to receive 7,500 rupees only. So how much amount we are not going to receive? 2,500. 10,000 minus 7,500. This 2,500 is lost to us. So this loss on debit side we have to show. 2. Stock destroyed by fire. Total stock value 10,000. Insurance company accepted to pay only 7,500. So the difference 2,500 is final loss to us. Show that 2,500 in outer column. So all amounts we are taken in P&L account. Then finally we have to calculate net profit or net loss. In rough notes, find out the totals of two columns. Credit amounts total is 30,700. Debit amounts total 17,100. Credit total minus debit total difference is 13,600. Credit side we wrote incomes, debit side expenses. Income total is more than expenditure total. Therefore, the difference is net profit. Debit total is less now. So, debit side, you have to show this net profit. 13,600. For this, you have to write 2 net profit. Two sides write down highest total. 30,700 rupees. P&L account is completed. Next, balance sheet. This is balance sheet format. Liabilities amount, assets amount. Trading account, profit and loss account. These two are accounts. Therefore, DR symbol, CR symbol we have to write. But balance sheet is only a statement. It is not an account. Therefore, don't write DR, CR symbols. Format is liabilities amount, assets amount. So liability side, when you are writing liabilities, you should not start with the TO2 because it is not an account. Similarly, asset side, don't start with the BY by. In trial balance, debit column, he gives assets, expenses, losses, drawings. No? So from these amounts, only assets we have to take in balance sheet under asset side. Similarly, trial balance in credit column, liabilities, incomes, gains, provisions, funds, reserves will be given. So only liabilities we have to take here. This is balance sheet. Balance sheet of Vinayaka Enterprises as on 31st December 2018. First trial balance debit column. Purchases, furniture. Furniture is an asset. Depreciation is given. Therefore, furniture amount in inner column. Depreciation we have to deduct. Adjustment number 4. Depreciation on furniture 10%. We calculated amount in P&L account. 800 rupees came. Subtract that amount. Remaining amount in outer column. Opening stock cash asset amount 1500 rupees. Sales returns, wages and salaries, rent, rates, taxes, sundry debtors. In previous problems, debtor word he used to give. But here he has given sundry debtors. What is the meaning of debtor and sundry debtor? Suppose firm sold goods to A, B, C on credit. To each member 10,000 worth of goods firm sold. On credit firm sold. So these 3 members become debtors to the firm. Total debtors value is 30,000 rupees now. Suppose to 3 members firm sold goods on credit and to X firm has given loan. Amount is say 20,000 rupees. Here these 3 members are customers but X is not a customer. We are not selling any goods to him. We gave loan to him. In this case, we have to use sundry debtors word and the total amount is 50,000 rupees. So debtors means all those members are customers. But if the debtor group includes customers and other persons, then instead of debtors word, we use sundry debtors word. Debtors, sundry debtors, both are assets only. Asset side, sundry debtors. Amount in inner column because adjustments are given 13,500 rupees. Adjustment number 2. Bad debts 1,500 and provide reserve for doubtful debts 5%. So these two amounts are given in the adjustments. Means these two amounts are not yet deducted from debtors. Now we have to deduct. First bad debts we have to subtract. Bad debts amount 1500 rupees. Next we have to subtract reserve for doubtful debts. We calculated the amount in P&L account 600 rupees came. Remaining amount in outer column 11,400 rupees. Machinery asset. No depreciation, so amount in outer column 5,400 rupees. Investments. We invested our savings money in others' business. For us, this is an asset. 8,000 rupees. Discount, commission, carriage, trade expenses, stationery, factory rent, coal and gas, interest on capital, bad debts, goodwill. Goodwill means reputation. We cannot see reputation, so it is an intangible asset. Asset side. 10,000 rupees. Accrued dividend. Dividend means income. When we purchase outside company shares, we receive dividend. This is an income. If it is an income, in trial balance, credit column he gives. But here in debit column he is giving accrued dividend. Accrued means we earn but the money not yet come. So meaning is dividend to be received. Income to be received. This is an asset because money should come. Asset side. Accrued dividend 1400 rupees. Come to credit column means here liability side. Capital at the end. Bills payable liability 2500 rupees. Creditors liability 5900 rupees. Interest received, sales, purchase returns, commission, discount, miscellaneous income. Trial balance amounts completed. Come to adjustment amounts. First one, closing stock. At the end we will show. Bad debt and reserve for doubtful debt completed. Outstanding factory rent. We have to pay. It is a liability. Liability side. Outstanding factory rent. 400 rupees. Fourth, depreciation on furniture 10% completed. Interest received in advance. So next year money now only we receive. So we became liable to other party. Without giving benefit, we received income. This is a liability. So liability side. Interest received in advance 500 rupees. So remember, expenses related adjustments are outstanding expenses, prepaid expenditure. Outstanding expenditure, liability side we have to show. Prepaid expenditure, asset side. Similarly, for incomes, two adjustments are there. Income to be received, nothing but accrued income, income received in advance. Accrued income, income to be received, under asset side we have to show. Income received in advance, under liability side we have to show. Sixth point, stock worth 10,000 destroyed in fire and insurance company admitted a claim of 7,500 rupees. From insurance company 7,500 rupees should come, income should come, therefore asset side. Claim receivable 7,500 should come, write down that amount. Finally asset side, closing stock. Adjustment number 1. Closing stock 10,500. Liability side, capital adjustment. Capital in inner column. Trial balance, credit column. Capital amount is given 40,000 rupees. In profit and loss account, net profit came. We should add. Plus net profit 13,600. Total in outer column 53,600. All amounts were taken in balance sheet. Finally, find out the totals of two sides. Liability side total is 62,900 rupees. Asset side, same 62,900 rupees. Thus, two sides you should get the same totals. Then only problem is correct. So this is all about 9th problem from final accounts topic. Hope this video is helpful to you. Thank you.